Welcome to The Curve Weekly, where we read the finance news so you don't have to. I am Vic Harris, and I am a finance professional who's made a career out of making money for other people.
And I'm Sophie Hallwright. I am a media producer. I worked in film, TV, radio for a long time and had no idea what was going on with the markets, so we created this podcast.
And a huge thank you to Emily Rigby, our fantastic producer, and everyone in the team that makes this podcast happen.
In today's episode, the markets are back. And what do we mean by that? Basically, it is following exactly what Trump says, up, down, sideways. We're going to talk about what is going on there and also celebrate, is it a celebration? A year since the tariffs went in. So we're going to talk about how this has affected global trade.
And one company has had a massive fall from grace. It's fallen 99% in the last 5 years from when it IPO'd. So we talk about that company and what are some learnings?
Whoop. You know that fitness kind of bro black watch situation? LeBron James is one of the owners and this company is doing so well. We're going to talk about the health tech space, this sort of investing trend as a whole and what we're expecting to see from this particular business in the next 2 years.
And one of my predictions for the year looks like it's coming true.
As in, the company that Vic guessed was going to go public is looking as though it's going to happen and be one of the world's biggest companies. So watch this space. But first, we are watching ourselves on 0.7 speed, which let's just say, not very cute.
We sound a little drunk.
So one of our friends, I have got permission to play this, by the way.
Yeah.
So one of our friends who we've both known for a long time, she's honestly the best. We love her. Maybe I won't say her name, but we're going to be playing her voice. So anyone who knows her will be like, nice. Anyway, she sent me this voice note and I was like, this is so funny. I'm not going to watch what she's telling us to do until we're on the podcast. So I'm just going to play a tiny snippet to give context for what I'm actually talking about.
Episode, latest one, which usually I do on a Friday morning. I've got a little ritual, but I was like, no, I'm gonna listen to Soph and Vic today instead. And it was really nice.
She
and
was
it was
saying she
funny. I
missed
had
us
you on
if she
0.7 speed accidentally, and you both sounded drunk, or like you were on something, like you'd had a Valium and a really strong tequila. And I was like, why? I was like, why do they sound like this? Do they know they sound like this? And then checked my settings and realised I was on 0.7. So quite lol if you want to listen to yourself on quite slow speed. It's funny. You've probably already done that.
I was like, we haven't done that.
No, we were drunk. It was that one witness.
April Fools. Oh my God. I was like, shit, we've never done that before.
It was so scary.
I know. So she was listening for about 15 minutes without realising what was going on.
Oh my goodness.
So she was like, God, they sound really out of it. She's like, both of them do. Anyway,
oh my gosh, I'm the opposite. I'm like, 2 times, everybody.
Well, she didn't do it on purpose, which I thought was the funniest part. So we're just going to play a tiny snippet.
Welcome to The Curve Weekly, where we read the finance news so you don't have to. I'm Vic Harris. I'm a finance professional and have had a career out of making money for people.
And I'm Sophie Hallwright. I'm an ex-producer. I've worked in radio, television, in the media industry, and I was just really sick and tired of not knowing how to make money. It's not good. It's really not good.
Oh my God, all we need to do is like a little slur and then it's like, oh my gosh, you are.
Spill something on ourselves. Oh gosh. Quite good. God, there's so many things to talk about today.
But the markets are back up.
Whoop, whoop, whoop. I was expecting them to be down for longer. I kind of didn't.
Or is this what they call a dead cat bounce?
What the hell is that? Is that what?
That's what it's called, a dead cat bounce.
Oh, that's really weird and disgusting.
I know. I don't know why, but I don't know why it's called that. But it's like when markets are falling and they kind of have a little reprieve and then they have another leg down, like massive leg down. But I don't think that's what's happening in this case. I mean, I don't know. I'm not a short-term market predictor, but...
I have seen a lot of people saying that's what they think is going to happen, though.
But this is just reacting to what Donald Trump says, and that's kind of what the market's been doing for the last 12 months. So he has come out and said that he reckons the war will be over in 2 to 3 weeks. If it is, this must be the shortest war ever. Like, what war lasts a total of like 2 months, 2.5 months?
I also just look at the headlines and everything that's happening and I think, this feels far from peace. This feels far from things slowing down.
Totally.
Kind of shocked people believe him and reacted to it. That was more I don't know, I just feel like, aren't we more aware that everything he does and says is to impact the markets?
Exactly.
Why are we trusting him? It's bizarre.
He's got so much invested in the stock market for it to do well. I think he's got something up his sleeve.
Oh, Christ.
I know. He's like, again, the puppeteer. But yeah, we've had oil come down below 100 again, which is great. But I think with all of this that's going on, there's still kind of an undertone of the global economy is not doing that well. Like we've still got inflation that's heading in the wrong direction. We've still got high-ish unemployment in certain countries. We've still got GDP that's slowing. Like there's still, it's just, yes, this might move the needle a little bit in stock markets, but
do you know what it's giving? It's giving Donald Trump's fake tan. It's almost like fake propping up the market.
Yeah.
All the underlying issues are still there.
Yeah.
He's trying to mask it with a bit of fake tan.
And it's also like a war and a high oil price does impact the world, like even if it's short term, I don't know. Yeah, I just feel like he can say what he wants, but the data speaks for itself.
Yeah, at what point are investors going to stop reacting to his word? I'm really curious to know.
Well, it's his word. It's his word, but it's also what he does. Like he said, I'm going to put tariffs on, and then wound that back. So everyone got spooked because he was going to do what he said he was going to do, and then he wound it back. So it's like he says things and people believe it because he does do it. Do you know what I mean? Like it's he knows he is the master of one of the biggest economies in the world and one of the most dominant stock markets in the world that a lot of wealth is tied up in, and so he knows he has this control and he knows whatever he says people react to. It's just volatile, right? It could be in 2 or 3 weeks' time the war's not over, and as we approach that time, markets are forward-looking, so they'll be like, oh, hang on, this isn't actually resolved. Because that's what he said. He said, when the war first started, it'll be over in about 4 weeks. And we're nearing that date. Things aren't over. So he's like, oh, it'll be another 2 or 3 weeks. Give the market a little bit of excitement. And then as that timeline comes, it's, yeah.
God, I don't love it. And I also think, one of the things that drives Vic up the wall is the idea of investing being gambling. And honestly, when you see the biggest stock market in the world, the biggest economy, riding off of whatever Donald Trump says, kind of makes me feel like the value of what you're buying is sort of irrelevant. It makes the whole thing feel more like gambling, honestly.
No, but what he says has a ripple effect for the economy, and then that comes through in companies, if that makes sense. So if he's saying the war's going to be over in 2 or 3 weeks, it means oil's going to come down, which means airlines will be better off, which means that inflation will be lower. It's not just what he says, it's the repercussions of what he says he's going to introduce or he's going to do or he's not going to do.
And then because they're forward-looking. And because markets forward-looking, they then think, if he's saying that, then these things are going to happen.
Then oil will be lower, inflation will be lower. Yeah, all of that. So, yeah. Oh, we've just got a new female CEO of BP, the first female of a major oil company, and we're in the height of some of the highest oil prices we've ever had.
Oh, God.
But I'm hoping that she'll be good for BP.
I mean, is she going to close it down?
If she closed BP down, we would have so many more issues in the world.
Can we talk about that, like in terms of what oil is actually used for? Because I think that I have such a skewed view on oil bad, let's not use it.
Because I think you're just thinking oil and cars.
Yeah. No, 100%. I'm thinking
we look at everything in the studio, it's probably made with oil.
Not ideal.
Yeah, fossil fuels. Yeah. It's kind of like 99% of plastic in the world is made from oil. If you think oil helps heat homes, gives people energy. Not people, but
No,
like
but
their houses.
give me more obscure. I know.
So like
energy.
retirement villages, any house relies on energy to keep warm.
You really try and get me with your like old person
But I just
getting
think
cold,
there's,
don't
like-
you? I feel like this is her go-to. She's
Like-
like, you should like BP because there's an old person getting really cold because fuel's expensive. I'm like,
No, it's just I was kind of in that camp of
by the way, for anyone that hasn't listened to the last week's episode, that's going to sound really incredibly unhinged from me.
what? Why
Because
is
it just sounds like I don't care about old people
Oh,
getting
yeah, no,
cold.
no,
I do,
yeah.
just to clarify.
No, but I was in this camp and I was like, you know what? Like, why is it taking so long to get renewable energy, as kind of the dominant energy in every country? And I was getting really like frustrated. And then I realized, okay, if we just switched off like oil exploration, oil exploration, if we switched off coal plants, if we switched off all the like dirty power, there would be people without power. And if you think in the depths of London winter, you'd have deaths, it would just, you have to do a rolled out approach. Don't get me wrong, could definitely be accelerated. I think that's what will come from this whole reliance on oil in the Middle East, with the most volatile area of the world right now. I hope it will lead to diversification.
I think a really good thing is that the UK and Europe is going into summer for the next sort of 6 months. Because
Yeah.
I think if we were heading into winter, this would be really scary for a lot of people. I mean, it's scary anyway, but I think in
You've got the
terms of,
southern hemisphere heading into winter.
I don't know why I thought that was a good thing in reverse. As if there's like less population in the south.
I mean,
like the second half
probably
of the
is.
world.
I think there probably is.
But
There's
in my
always
logic in
some
my
part in the
head-
world in winter.
Oh my God, the logic in my head was
Everyone's heading into summer.
no, literally. I was thinking, oh God, it gets so cold in Europe in winter, as if it doesn't get cold in other parts of the world. Because I guess in New Zealand, winter isn't as dire. But
No,
I mean, it
but
is
in, like-
still cold.
Yeah.
Still need heating.
Yeah. But also you've got to think of, and like there's been stories on the news of highlighting kind of small remote businesses that have been severely impacted because they just can't afford to buy petrol, which is oil. And like in Thailand, it's mainly in Southeast Asia where it's been most impacted. And you've got these remote villages that can't even use the motorbike that they use to get the water up to put the water in the plants and the agriculture, like little things like that. Like you just see, oh, it's a bit more expensive at the pump for us. But there's actually, when you have countries that get 90% of their oil from the Middle East, they're feeling it way more than we are.
Also, even being in Vietnam, I mean, I feel like I've had not much cultural exposure in the last couple of years, like have really been, as you can tell, in the Northern Hemisphere. But when I was in Vietnam, that was one of the things I thought. We did a motorbike trip through the mountains. There was all these houses in the middle of nowhere. And you're right, a lot of them have their whole family on a motorbike, like 5 of them. These kids are sometimes walking, 10 kilometres to get home or to school. The motorbike scenario is how a lot of them then get to any of the jobs where they make money. I mean, imagine if they just are stranded, can't get food, can't get groceries, can't get water, and are in the middle of nowhere. Like, it's quite scary.
Yeah. And if we think of plastic itself, it's a bad example because I know you hate them, or everyone hates them. It's plastic, like a plastic bottle is... Yes, there's oil used in making that plastic bottle, but then there's also oil used to getting it from A to B. It's in the manufacturing process, also in like the moving and the logistics of that item. Like it's everywhere.
It's not good. It's not good
no.
at all. We've got an anniversary now, Vic.
We do.
It's a big birthday. Oh, a celebration. It's a year anniversary since our dear friend put the tariffs on the world.
Yes, this is pretty much to the day, actually, that Donald Trump announced 10% tariffs pretty much on every single country in the world as part of his Liberation Day. They were called Liberation Day tariffs because he was liberating America. And anyway, Canada and Mexico were much higher than that. But yes, today, 12 months ago, was when that was announced.
Play the clip.
Shall we? Play the clip.
Okay, we're going back in time. I have never been more excited for a Curve Weekly than today.
I've got my power suit on. I'm reading. My reporter crossing live now to London.
Just look at the excitement in your face. Thrilled.
So Donald Trump announced that he was going to effectively stop globalization as we know it. And globalization just means the ease of movement of products around the world. It's every country leaning into their strengths and producing what they can at the best possible price so that the rest of the world can benefit. And that has meant that we've benefited as a global economy from being able to purchase cheaper goods because everyone's leaned into their strengths. And what Donald Trump has done is he has said, you know what, I've had enough. There is too many jobs that are being lost to other countries and not given to Americans. He announced tariffs on over 100 countries. The shock factor for the stock market was, oh my goodness, what does this mean for the future?
It blows my mind. I think sometimes back to...
I'm like, that was a year ago. Gosh, that feels like yesterday.
I also just sometimes... I know that the least important thing to think about is the clothes that we're wearing.
I was thinking that, I was like, wow, I really made an effort then, and now I'm in like some casual jacket, and I'm like, yeah, it's the anniversary of the tariffs.
I'm sitting here in like what kind of looks like a school teacher's outfit. Like I've got sneakers with my we
really let it slip, haven't we?
I've really let myself go in the last year.
I quite like the power suit. I might bring that back.
Yeah,
actually.
I think you should. Yeah. It was a good look.
I'll make more of an effort. Sorry, guys.
Can we talk about the fact that I didn't even know what a tariff was?
Yeah.
When things... it was the same with inflation years and years ago. I kind of vaguely knew it, but didn't. There's almost these hallmark moments in the last 5 years since we've been doing the podcast where there's been these like big realizations of... or a new concept introduced that obviously...
Like a dead cat bounce.
Exactly. What the hell is the dead cat bounce, Or the black swan, or the, the run on the bank. There's all these, things that
blood
sort of
on the streets, on the knees, sharks are circling.
Oh, my God. It's so dramatic. But
so dramatic.
The tariffs have been around now for an entire
all these
year.
men sitting behind their computers with their gilets trying to make it so dramatic. It's like, yeah.
Everyone, we've got a dead cat bouncing. We've got a dead cat bouncing.
The sharks are circling. The sharks are circling. Going.
Apple's on its knees, everyone. Oh my God. Anyway,
we're a year.
We're a year.
We're a year since that. What a blur. It's just like the markets are up 16% since we recorded that episode. So we were like, oh my gosh, they're falling. I mean, they did fall in April. And anyone who bought then, amazing. Anyone who was...
Get a close-up if you want one.
Dollar cost averaging.
I bought so much. It was the best. It was the highlight of my career, I would say.
Yeah, so in April last year, stock markets fell about 12%. They've now rebounded and they're up 16% since that clip, so since 12 months ago. So, and remember, markets, the US stock market usually does about 10%. So 16% is great year. And if we look at what was the biggest fear from tariffs being introduced was inflation. We're actually, in the US, New Zealand, UK, pretty much the same or better than we were in terms of inflation levels.
Oh my God, I'm so conflicted because on the one hand, I want it to be really bad so that we can look at Trump and say, you absolute moron. And then on the other hand, I'm like, thank God, because I know inflation would be crippling so many of us right now.
Look, it's estimated that it probably cost the average household nearly $3,000 per household in terms of increased costs. But
is that annual increase?
Annual, yeah. So that's what it would have kind of cost every household with these tariff impacts. But we've had other things at play as well, like AI, which has helped keep inflation a bit lower. There's so much else going on in the world. But it's just funny, even the headlines back then of, this is going to impact the global economy and all of that. And you're kind of like, well, we're sitting here 12 months later and it hasn't really done that. And I think it's a really good reminder that you just need to keep investing. I saw this little clip on social media and it was all the reasons not to invest. And it was in 2016, Brexit, it goes through every year from 2016 to 2026. 2016, there was Brexit. 2018, there was actually a trade war. 2020 was global pandemic. It goes through every single year. After the global pandemic, we had the supply chain crisis. Then we had rate hikes. Then we had AI bubble. Then we had the tariffs. Now we've got
dramatic.
Last year was the tariffs. Now we've got the Iran war and the oil spike. There is always going to be something.
Yeah, I think that's such a good reminder.
Yeah, it's every year there is something that is supposedly going to derail the stock market.
At what point do we just realise that media needs things to write about? And
Or do we just do a curve weekly every 5 years and go, oh, well, not much has happened. Oh, the stock market's gone up. Oh, there's
it'd be really not ideal if we did that, by the way, from a business perspective. Like, I'm kind of glad there's so much to talk about.
Yeah. But it just kind of highlights, it's great to know what's going on and being part of the conversation. And like you said, know what a tariff is and know what inflation is, but you don't need to react. And I think sometimes the most boring investing strategies are the best.
In 2025, when the tariffs came in, had there been tariffs before? Like, was this a part of, I don't know, a economic strategy at any other time?
Yeah. There's always, a lot of countries do have tariffs on other countries, but they're reasonable, right? They're not ridiculous like Trump was going to put like a blanket increase on all countries. It's like, no, you look at each country and you look, okay, is that fair that you are, charging me this and I'm charging you that? Then he did, so it was a 10% blanket, and then he did the reciprocal tariffs, which were even higher, which was like the next leg of tariffs. So there was a huge step up in tariffs. That was when he did like the 150% on, I think it was some of the Asian markets, but that 10% was the biggest since like the 1930s.
It's crazy, isn't it?
Yeah.
I do feel like Trump is trying to create a world that is exactly like the 1930s in many regards.
I agree. Yes. We'll save that for another podcast.
I was listening to this business owner who has a company called Princess Awesome. It's a children's clothing brand. And her and one of her friends started it like 10 years ago. And she was basically sharing her story or her experience over the last year and how it's impacted her business. They manufacture their clothes offshore, so not in the US. Before tariffs came in, they were growing really significantly. Like the business was going well, everything was fine. When the tariffs came in, it was like a 30,000 tariff impact on them. And the day that they came in, they actually wrote to all of their customers and they were like, hi everyone, we want to explain what tariffs are and how they impact businesses and how they're going to impact us. And they explained that normally businesses pass those tariffs or those extra prices onto consumers, but they basically said, we're not going to do that. We're not going to make our clothes more expensive. We're going to do what we can to absorb this. And the customers responded really well. They sent it all around the place. And then basically they were contacted by the Pacific Legal Foundation asking if they wanted to join in this whole lawsuit against the tariffs.
Yes.
So I didn't even realize that, a year ago, people were already trying to get refunds, which I was like, gosh, when we started talking
there had to be a court order saying they were illegal. So they were building this case in the assumption that they were illegal. And then that got passed and then they're like, now we can apply for refunds.
It's just I just had no idea. But anyway, so they were dealing with this in the background. But I just think it was quite interesting. So they started talking about how one of the quotes in the interview, she said it feels like we're playing Battleship and you just don't know when you're going to get hit. And if we get hit, we are sinking. And I was just like, she was talking about the fact she's a 2-person business. They've spent their better part of a decade building it. And the whole point of tariffs is to bring manufacturing into the US.
Yeah.
But she was just saying, they've tried to have their clothes made in the US. Like they don't have the infrastructure. The factories aren't set up, which sounds kind of odd to say. And a lot of people in the comments of this interview were like, as if America doesn't know how to produce clothing. But she was just saying, we've tried. If we wanted to produce in the US, we would have to import someone from overseas who knows how to run factories and do this properly, buy our own machinery, make it happen. It's just like, if the point is to make small businesses bring their manufacturing onshore, tariffs is the worst way. It's all it's going to do is sink their business.
Yeah.
Before they have a chance to do anything differently.
It's almost like subsidies is probably the best way to do it.
This is what she said, subsidies or grants, or she's like, it's not as though we're not open to it, but going about it in this way is just
the cost, and this is exactly what happened with Apple, 20 years ago when they started moving their manufacturing to China, was that they were looking at, it's the cost, but also how long, because the Chinese were hungry for that work because they had a rising middle class that were way less affluent, weren't getting paid as much, and they were like, you know what, we're hungry for these jobs, we will work. I mean, it's not probably socially acceptable now, but they would work, as many hours as they could to get that work across the line, because that was like a necessity for them. Whereas an American, they'd be like, no, I'm only working 9 to 5 and I want to get paid X. You know, like there's kind of, I think it's just supply and demand. And then that makes China much more affluent, and they can put that money back into their economy and help grow their economy. And then now we've seen it 20 years later, you know, Chinese manufacturing is more expensive, and then so people are going to Vietnam, they're going to India, and like it's just, but it helps bring up these economies, and America's already up there, if that makes sense. So it's kind of, I don't know, it's like it's just global trade and globalization is great for the greater good. When you start closing off and being, you know, trying to restrict things to your own country, it's just like,
it's also just like, let Mexico be good at growing avocado.
Totally,
Let Bangladesh be amazing at producing clothing.
Yeah.
You know, you don't have to be good at everything.
Yeah.
And the whole point of having a global economy is that you buy and sell things from different parts of the world.
Well, it's like, let's...
What?
No, I was just like, let's get Emily to produce the podcast because she's great at it. You know, let's not sit there and have me try and do it. Let's outsource.
Bloody hell, imagine.
Like, it would take a month to edit one podcast. Like, know your skills, and then you can reach more audiences, grow the podcast. You know, it's like, it's the same at a country level. It's like, let's not, you know, we don't have the skills, or, you know, yes, we might have the skills, but we don't have them for appropriate cost, whatever it is. But yeah, it's just like leaning into their skill sets.
And I think this example of this small business is, it basically just makes you realize maybe you do want to bring manufacturing clothing in as a part of the US economy and something that isn't sent offshore. But in the same way it took China 20 years to get good at that, it's going to take a while for businesses to be able to get the same quality, the same price, the same experience in-house or in America than they currently do overseas, because they've spent 20 years developing these. That is their primary industry. So I think, anyway, we're celebrating the year. We're not really celebrating the year. I mean, but it's kind of interesting just to look at the last 12 months in review and how it's actually impacting businesses and the economy.
Yeah. We've got a company that is no longer a public company, and it's got a little New Zealand slant to it.
A little fish and chips.
Yes.
Now, this business, I would say, is the business that we were all very proud of, weren't we? It was like our little success story. You may have seen the little woolen shoes trotting around.
On like older men.
On 50-year-old men who thought they were cool. And we're talking about Allbirds.
I actually had a friend come up to me last night and they were like, Vic, you have to talk about Allbirds on the podcast. I was like, yep, already researched.
Don't you worry, it's in my spreadsheet.
But yeah, it's unfortunately not a public company anymore. It got bought by a company called American Exchange Group, who owns like Ted Baker and like a whole lot like other brands.
Of course, it's owned by Ted Baker. That makes a lot of sense. Very similar clientele.
Yes. So it got bought for $39 million.
Which sounds like a lot, but let us just explain why that is a terrible purchase. Sorry, not terrible purchase, terrible sale.
Yes. So 5 years ago in 2021, it IPO'd and it was valued at $4 billion. Since then, it has only gone one way.
And that is the steepest hill you've ever seen.
And its share price has fallen 99%. So it's gone from $4 billion to effectively $40 million.
So bad.
So if you had invested $100,000 in this business, you would have walked away with $1,000. Or if you'd invested $100,000, you would have walked away with $1.
God, that is a really bad return on investment.
That is like
the worst return on investment.
That's
God.
Yeah.
And I think this is a really good example when this happened, and actually when big businesses IPO, as in debut, first time on the stock market, woohoo, everyone can buy shares. People get massive FOMO and they want to buy. And this particular IPO, when people bought shares, I remember
talking about it, and because it was up 90% on day one. Like it was one of the everyone was like, damn. But it's like, no.
Imagine if you bought then, and then the amount
had
it's
been
dropped.
the last person that bought, and then it was like all down. But I also think because it was a product that lots of people knew. There was a lot of hype around it. It was kind of new and shiny back then. It was the poster child for sustainability, which was huge. They had a lot of things going for it. It was also 2021. If you think back to then, 2020 was COVID, and then the market absolutely roofed it after that. And so everyone was euphoric. Everyone was like, you know what, COVID who? It was, everything was going gangbusters, and that's when they IPO'd. So they IPO'd at kind of the peak euphoric moment with, a big sustainability trend behind them, and they just rolled out stores way too quickly. They decided to go direct to consumer, so had flashy stores. I mean, we've seen them all around London.
They did a lot of marketing as well, didn't they? They spent a lot of money on marketing.
Yeah. And competition. There's now, so many brands in the sustainable fashion space, and they also expanded beyond shoes to...
I think this was their biggest downfall, wasn't it? They started with shoes, they were successful, and then they started producing jackets and all
pants,
sorts, which makes sense, right? Like, you start with a product and then you expand from there, but I mean, they were not working.
No, it's called diversification.
I love it. Stick to what you know, and what you know is woolen shoes, not jackets.
Yeah. And we've seen it with Lululemon.
Diversification, that's fucking brilliant.
We've seen it with Lululemon too. I mean, I love their yoga pants, do not get me wrong. I don't like their skirts. I don't like their I'm just it's like, stick to what you know. But then again, there's only so many times you can iterate a yoga pant or a shoe or Anyway, the reason it's got a Kiwi tilt to it is that there was a Kiwi soccer player called Tim Brown. He was worth $650 million at IPO, and he's got a few million.
Devastating. He put heaps of his money in.
He was a founder.
Oh.
So when the company's valued at $4 billion and you own a significant stake, so his stake was worth $650 million.
Yikes.
And he held on, and now he's worth a couple of million.
Devastating.
I think the kind of the learning here, you're right. So if IPOs are not your one shot to invest, I think that's really important. You can get caught up. The majority of IPOs do not do well. So don't panic and be like, damn it, I've missed out, or that was my one shot to get in. There will be other times. And so I think it's really important. I think the other thing is profits. This company never made a profit.
Do you know what's interesting? I was looking at the story. They have sold for less than the amount of inventory that they have.
Which shows the value ascribed to the inventory.
They have 43 million in product left. They've kind of been bought for what they still own. It's kind of bad.
But I think it's, the fact that it never made a profit and it's a retail business is pretty scary.
But how do you make that, how is your IPO that successful and the future of your business that optimistic if you've never made a profit? I don't understand that.
A lot of companies don't.
I guess Uber, it took years, didn't it?
It's all about the future, and they'll be saying, we're going to turn a profit when we reach X revenue and all of that. Then you slowly start to see, well, hang on, you missed your revenue, your costs are going up. Okay, that profit's going to take longer to get, to actually happen, and all of that. So they raised $300 million to give them a few years of buffer until they reach a profit, but their losses were about $400 million. So there's $100 million gap of what they raised to get them through to profit, but they still never turned a profit, and that's when you're like, oh shit. And you could go back to investors and raise more money, but your share price is on its knees.
Yes. So you'll be not getting a lot of money for those shares.
No, you're kind of like, oh gosh, okay, people put in money up here, and now we're valued down here and we're having to get more money. You rebase anyway. But this is the other question with this is, if you were a shareholder, when should you sell, or when should you have sold? I mean, hindsight's great. It would have been, back when it was $4 billion. I think.
But could you have sold then? How quickly? Didn't it go immediately that high? As in the first few weeks?
Yes. Yeah. I think.
How are you meant to think that?
Yeah. No, it's hard, right? And there would have been a lot of, at the time, excitement about Allbirds and, kind of drinking the Kool-Aid and that kind of stuff. But
because it was around the time when a lot of people, it was probably millennials between 30 and 40-year-olds were obsessed with them. That was kind of the peak. It was that sort of age group. And then they tried to target Gen Zs. And sorry, but what makes you think that you're cool enough to get a Gen Z trend going? That
if I think about the people that own Allbirds, I don't want to own them. I don't want to wear that, you know?
But that's what I mean. I'm like,
Yeah.
but we're even less cool.
Yeah. They've also got one style.
I just think there was so many disasters with this brand.
But also we could sit here on our high horse and be like, oh, of course.
But
you'd
I
be like,
never thought they were cool.
No, neither.
I always looked at them and thought, really? Are we getting on board with
and
those?
everyone's like, they're so comfy. And I was like, I don't care. Like,
Yeah,
I'd rather be in
fashion
pain.
is pain. Beauty is pain, everyone. I agree.
No, but I guess, yeah. So when should you have sold? And look, I think it's very easy to say you should have sold then or you should have sold then. I think this is why diversification is really good because, you know, if you had put all your eggs in this basket, you would have really been crying.
Yeah, it's so easy to say, oh, well, they shouldn't have done all of those things. It's like, of course they were going to. They wanted to grow.
But I think IPOs in general should only be a tiny portion of your portfolio because they don't have a track record. They don't have a history of public financials that you can go and you can look at, like Apple, and be like, well, they've actually grown their profits year on year on year. They're stable, they're consistent. You know, if they do have a wobble, I know that they're going to probably come back, you know, whereas this, it's just such a new business and new as in a new public company. So I think it's just realizing IPOs are risky.
It's way more of a gamble than it is buying the stock market, I think.
If you think a company IPOs when things are doing really well, you know?
Like the chances of them doing really, really, really well so that you make a really great profit on that is like probably much lower than buying an existing company.
I would rather wait 5 years for a business and then jump in, or at least a couple of years and they've hit their targets and they show consistent delivery, and then I can get comfortable. There's just too many other things to invest in that are way less, you know, going to give me grey hairs than IPOs. Yeah.
I mean, I do feel like I slightly have a bit of remorse for how mean I've been about Allbirds, because I think it would be really sad to have put this much time and energy and money into building a business for it to sell for what it has. So I really, really hope no one that works at or owns Allbirds listens to this podcast.
Yeah, you're right. There's a human element to it, right?
It's so easy to sit here and be like,
stores.
oh, the shoes are ugly. It's like, yeah, well, like, have you ever designed a shoe and built a $4 billion company? No.
There's people that have lost a lot of money as well. And I think if you are sitting there and you have invested in Allbirds and you have lost money, like the best thing you can do now is literally sit down with a piece of paper and write down what your learnings from that have been.
Oh, I love that.
And what you won't do next time. Because otherwise, if you don't learn from your mistakes, it's going to cost you way more because you probably make those mistakes again. So it's like just sitting down.
What I will also say about that, I think that's such a cool idea. And, you know, Vic with a pen and paper is like something I don't often see, you know, like a little journal reflection. However, also investing in the stock market, and there's what you're always going to have an Allbirds scenario where you've lost money. I think the worst thing is to beat yourself up about a mistake you made like this and then be put off making investment decisions or feeling like, oh, I thought that was going to be a good one and I've failed and feel less confident in investing in things. But it is risky to make bets on single stocks. And unless you are a really experienced investor, I don't think you should be putting a huge amount of money into investing opportunities like this. You want to be super diversified. So if Allbirds falls off a cliff like it has, you're not sitting there feeling quite sorry for yourself. So if you have bought it and it didn't do well, like you kind of just have to be like, well, this is sort of, it's almost like, not to bring it back to dating, but it kind of is. You're going to be rejected. You're going to get heartbroken. You're going to go through like the fucking extreme anxieties of like, are they going to text me back? But that's also the risk of dating, you know.
And if you have nothing else going on in your life,
then that can be a lot.
It can be all consuming. Whereas if you're like, that's all right, I've got some great friendships,
and a job and a blah, blah, blah. Whereas investing, it's like investing, you are going to lose money. You are going to have disasters like this. It's just part of it. You're also going to have big wins. Yeah,
exactly. It's like if you've got 30 stocks in your investments or whatever, or in a fund that you invest in, one doesn't go well, it's not the end of the world. Yeah.
There's an exciting new space that we're going to look at right now because there is a business doing super well. I'm quite excited about this, like not just this business, but this whole industry.
And we just said how investing in IPOs is risky. But there is an exciting one coming called Whoop.
To me, it's almost the fitness bro signal. You know,
Yeah,
anyone
yeah.
that has one is probably doing high rocks, has potentially done that like 50, 30, whatever it is when you do like so many exercises in 1 week or...
I remember hearing this on the Diary of a Serial podcast like 2 years ago, and I was like, what is Whoop?
Because they're quite ugly as well. Like,
Yeah.
they don't actually display anything on their screen. All of their data is like sucked into their app. So it's not... It just looks like a random black
Well, you don't
rubber
pay
band.
for it. You pay just a subscription. So you get the watch for free, essentially.
I mean, it's genius.
Whereas an Apple Watch, you pay for. Yeah.
Yeah, because I think the difference with Whoop and the big reason that I think it's doing well and it's kind of got this USP or like, you know, thing that sets it aside is that they really focused on like sports recovery.
Yeah.
And so all of these big sports people like LeBron James were fronting it. And so all these kind of fitness bros were like, oh, this is the best way to track my recovery and my body and blah, blah, blah.
If you've got athletes that are backing it, it's like,
Yes.
yeah. They've been pretty clever, but it's just been valued at 10 billion. It's going to IPO in 2 years, approximately. I mean, in 2021, it was valued at about 3.5 billion. So it's absolutely killing it. It's the third biggest player. So you've got Apple Watch is like dominating
kind of shocked
in the
by
kind
that.
of wearables space.
Yeah.
Then you've got that Aura. Sorry.
Aurora?
The Aura ring. Yeah. And
I
then,
really want them to be cooler. Like, if they can make the designs not look so ugly, I would absolutely get one.
I know. It's like a wedding band,
It's
an
so-
old man's wedding band.
It looks like my dad's wedding
Yeah.
ring. It's big and titanium looking. And
like if you
thick.
could just put a few diamonds on it,
Yeah.
it'd be great. Thank you.
Oh,
But-
God. I mean, that would
yeah.
be a really cool innovation in the space, is to have really gorgeous wearable jewelry that appeals to women that has the same technology benefits.
Yeah, I think that's it, right? Like it doesn't really. I had a Fitbit for a while,
That's right.
and it's just ugly.
It's so ugly. It looks like a prison bracelet.
And
You know, like a...
and you have to wear it all the time. So you'd go out for dinner, and it's like, hi.
yeah,
It's
it's not
just
good.
But anyway, this is a space that's growing. Wearables, the wearable space, it's expected to grow from 200 billion this year to about $1 trillion market in 9 years' time. So that's about 20% growth a year. So this is a massive space. And it's kind of what we were talking about last week around people being way more involved in their health and wellness, wanting to extend their life, wanting to be more active, worry about their sleep more, you know, like they're wanting to have control of all facets and make sure like, okay, cool, I'm not sleeping well. What can I do about that? Like, yeah, because it's all...
I actually think that there's also almost like a deeper trend, which is people are trying to go for prevention when it comes to health rather than reaction. And that looks like getting full body scans. That means getting regular bloods. That means being really across what's happening within your body so that you can spot things before they're problematic. And I think that's amazing. You know, if you can be investing in people's health so that they aren't having to treat these awful illnesses, but actually spotting them incredibly early, how amazing.
Totally. There should be government funding for these. There's 2.5 million people that use Whoop, and they log in 8 times a day.
I mean, those stats are enormous. Also, think about the amount of data. They
Totally.
have like 100 megabytes of data per person per day being uploaded. Think about the insights that you're getting from 2.5 million people.
Imagine the network effects and like the people that would want to work with you and the brands that would want to work with you because they'd have access to all that data.
But
you
also,
know?
surely just selling that data or using it in health technology and research
Totally.
could actually fast track finding...
But imagine like a sleep improvement pill or whatever, and they go to Whoop and they know exactly who needs help with this product. Like creating that kind of network effect with a business and having that data, you're right, it's the data, having that data and then being able to create this network effect is like so incredibly powerful. It's
you're
it's
looking
like zero.
into someone's body, you know, it's this so much in-depth personal information. Like if you think about what happened with the Flow app and they leaked all that data, it was like a business that was founded by men and it was this whole thing that happened not that long ago actually. But this isn't just zooming into a woman's menstrual cycle data. This is someone's like almost entire body, like their heart rate, their like it's like blood biomarkers, like it's intense the amount of information they have.
Yeah. Like I'd be a bit frustrated though. I'd be like, okay, cool, I didn't sleep well. like,
Fix it.
how do I sleep better? I want to sleep better tomorrow.
Well, maybe that's their part too. Is to be able to almost create products that solve the issues that people are seeing from a health perspective. We've noticed that you are experiencing XYZ. Here is a product from Word to fix it.
It's because you had a margarita before you went to bed. Like that kind of stuff. Be like, okay, cool, good to know.
Oh, God. I'm excited by this space because it feels...
And then imagine overlaying AI.
Yeah.
Be like, okay, well, how do I turn into LeBron James?
Right, guys, we've had an email from someone in the community that we wanted to read out. Did you have anything else that you wanted to talk about before
Just quickly, another IPO.
Oh, gosh, there's lots happening.
SpaceX announced today
I saw this.
they are going to IPO. And this is the biggest IPO ever.
Did you predict this? Was this in your predictions or was this mine? Was it yours? It's Victor Harris. I saw it and I thought, was this my prediction?
I don't know. I think it was.
I think it might have been.
I think it might have been, yeah. But they're going to raise $75 billion and they will have a market cap. So it's like the size of the company will be $1.8 trillion. It
just means nothing to me anymore. I can't remember.
I know, it's all zillion and gazillion. But it'll be the sixth biggest company. So we've got Apple, Nvidia, Google, Microsoft.
God, talk about starting strong.
I know, just go straight to the top.
Here I am, off I go to the top of the list. Wow.
And it's IPOing in June, which is Elon's birthday. And because it's a space company, it's like there's some alignment with the stars and shit. I'm like, oh my God. I mean, I would do that too if I was about to IPO the biggest company in the world. I'd do it on my birthday. I'd be like, I'll command anything.
Let's have a party.
Yeah.
I think the idea of being able to invest in a company that is doing stuff in space is kind of exciting too.
Yeah. The last biggest IPO was a $30 billion company in 2019.
And who was that?
Saudi Aramco. It's like an oil company. And then now...
SpaceX at 1.3 trillion.
1.8 trillion.
Oh, God, I've got such a bad memory.
Yeah, wild.
Yeah, crazy.
This does kind of scare me, like to suck out $75 billion of money from somewhere, from other stocks to invest in this. You know how we spoke about, like, I
know you say this, but it's really weird because I don't know why, for me, I'm like, is it coming from where people have invested in other stocks or is it just people that haven't invested before find more money to invest?
Well, it's hard to know. But, like, if I have my 30 stocks that I invest in or my fund even or whatever it is, and that's $100 a month, and then I want to invest in this IPO, and I put even $20 of that a month into this IPO, that's $20 I'm not putting across those previous investments that I made. And, it's less money going into those investments because I've got a new one that I want to invest in.
But isn't it just part of the cycle of investing? People buy and sell and reallocate capital?
It's just you do see it, like, we've never had an IPO this big, so it'll be interesting to see what happens. But you do see it in a smaller sense, like in the New Zealand stock market. If there's a big capital raise or a company raising money, it does suck out of some other companies, or the market's just a bit lackluster. Yeah. But that's a very small market, so I don't know. It'll be interesting. This is also this will be global interest. So
where are they IPOing?
In the US.
On what?
I don't know.
NASDAQ?
They've been very secretive about their company filings, and like they don't have to show their financials, and
unless you've got an invite to Elon's party.
Pretty much. There's an opportunity buying the exchange that takes that IPO. Because the fee you would get and the broker doing the deal, like it'll be.
So do you mean if you were investing in, say, the NASDAQ as the actual exchange or the S&P 500 as the exchange?
Yeah.
Could be
not the NASDAQ or the New York Stock
Exchange.
I
get so confused with that. Yeah.
Yeah. So the S&P
500 is the
index, and that has 500 companies that sit on the NASDAQ and the New York Stock Exchange, but they would be fighting tooth and nail to get this listing.
So you could invest in both of those, like the NASDAQ and the, what's the other one? New York Stock Exchange. Yeah. Whoever gets it would get, because it would be in the US.
Yes. Yeah. And that's like 75 billion of like new money, or, some of it might be existing coming from other stocks, but it's interest, it's money, it's more trades, it's more interest on your stock exchange. And if it does well, then other companies will be like, well, SpaceX did well on the NASDAQ, so I want to invest.
I wonder if he wants to F over Trump by not putting it up there, because it is going to, positively impact the US economy.
But then if you put it on the London Stock Exchange, it's like that's
not going so far.
Yeah.
Okay, I really want to move on to this
Yes.
email from the community. Okay, so we've got an email from Frankie. Here's a little something that I've always wondered in the back of my mind, and now it seems like the perfect time since my stocks are tanking. Just to give you a little bit of background, I invest solely through Sharesies with a mix of ETFs, S&P 500, and various other intentional iterations of that. I also have exposure to some singular stocks and companies like Alphabet and commodities like gold. Very clever. Stunning investments.
Very diversified. Love it, Frankie.
Oh, she does say. So I would say I'm pretty diversified. Agree. I have noticed that my portfolio has halved in terms of percent return since all this drama has unfolded in the world. And it got me wondering, what is a good return when it comes to a portfolio? Or is this irrelevant and should be ignored? Love you girls. You're the best, Frankie.
She's probably seeing that stock markets haven't fallen as much.
By 50%, but
hers
portfolio
has. Yeah.
has.
And I think like when you say you've got a commodity like gold has moved a lot, and there's some single stocks in there, which it's hard when you don't know the percentage of what's in your single stocks, what's in ETFs, what ETFs you have. But I think this is well diversified. I think she should be really happy with what she's got in there, like having a bit of commodities, having some ETFs, having some US exposure with S&P 500, and then some individual stocks that she's obviously really likes, like Alphabet, which is Google. What is a good return when it comes to your portfolio? Like, it totally depends what you invest in. You know, if you just invest in some really boring companies or a lot of ETFs which are well diversified, you're not going to have these really high returns and these really low returns. Whereas if you just invest in like a few single stocks, you're going to have a much more volatile portfolio. But all we can kind of go off is the US stock market return, which is about 10% return per year. So if you're achieving around that, but that's over the long term. So
you zoom in with all this drama happening and it's not at 10% and it's on negative, that's kind of normal.
Yeah, it's kind of normal. And I think that's really important, is that there will be short-term movements in everyone's portfolios. And, you know, if you've got a great selection like she does and you are well diversified, your portfolio will go up more than the general stock market return when those certain things are doing well, but it will also go down more than the general stock market return. So it's so hard to know, and yeah, there's just like so many different things at play. But there is also another thing in here, which is currency. So if I look at this, I don't know with what ETFs she's invested in, but I'm assuming like S&P 500, that's all US companies, so US dollar investments. Alphabet, US dollar investment. So
what you're seeing in terms of the return from those US stocks will be one thing, but your return won't be exactly that because you're paying for the currency exchange as well.
Well, say the return of those has been 12%, but the currency has moved in the opposite direction. So you're now, when you convert the US dollars to New Zealand dollars, you're getting less. Your return in New Zealand dollars might only be 10%. So you've gone up 10, but the currency has kind of moved against you and fallen. So you're making negative 2% return. So your overall return's 10%. It could also move the other way, right? Like you could be up 10%, and then the currency works in your favor, and you've got another 2%. So you've got 12% return overall. Like currency is just thing you kind of
fees you're paying for. You're paying for a lot also with it, because it's not just what you're paying for within the stock market and the things you own. There's also if you're on Sharesies, there's a percentage of that they'll take. You know, you have to look at the overarching breakdown. But
that's why we say the less you can like trade,
the better.
If you can auto invest, do it once, you know, and invest across all, you know, companies or ETFs or whatever you're investing in, great. The more you try and time the market and jump in and out and exchange money, like you get charged a fee when you exchange money and when you do trades as well on Sharesies. So it's just really important to realize, and every platform's different, but there is no platform that doesn't charge fees because they're doing you a service. So if there is a platform that's like, we've got no commission or we've got no, like, there'll be fees in other places. So it's just a really good reminder.
Okay, I want to say something else on this. I think the fact that you are looking at the percentage return, firstly, awesome. Great that you're involved, and also you're connecting the dots between what is happening within your investments and seeing what's happening in the more like geopolitical, global, there's so many things going on. So you're obviously recognizing the fact that what's happening in your portfolio is a direct reflection of what's happening globally. I think it's really amazing when you can feel like you have a grasp on what is going on.
Yeah.
To give you almost like the answers to the why. It doesn't necessarily mean you need to make a decision. I think you're obviously diversified, which is amazing. But for me, when I feel like I know what's going on in the economy, it then means that if I see an investment doing something, it makes sense to me.
Yeah.
Because we were just talking earlier in this podcast around like, when should you sell? Obviously, if you were just looking at the return, you may be thinking, God, it's like halved. That's not good. Maybe I should think about selling. But actually, if you're aware of what's happening in the bigger picture globally, you know that this is a short-term situation.
Yeah.
It doesn't mean you have to make a decision, but I think just being informed and educated helps to make you feel like a more confident investor. Well, I know it does for me.
Yeah, definitely.
We wanted to ask the community a quick question before we end this episode, and that is, we've been talking about this a little bit. We've got a bit of a change of scheduling. I hate that I say scheduling, not scheduling. I think our
Did we decide on a name?
Not yet.
Can I put my vote in?
So for anyone that doesn't know what's going on,
Sorry.
we're talking about the fact that we are actually increasing our episodes soon to have 2 Curve Weeklies and 1 Raising the Curve every week. And we're trying to find names. We're trying to vote on what days they should be released. And we kind of wanted to involve all of our listeners in those decisions. So Vic's talking about the name because we were trying to ask who has good ideas, and so many have come through. But I'm not sold on any.
I think we continue. There was one that came through that was like, you've built an incredible brand around the Curve Weekly, and you just keep it that, because it could be bi-weekly, it could be
Do we
once
just
a week.
bi-weekly?
No, you just said the Curve Weekly. Like, it's still a podcast that comes out on a weekly basis.
Twice weekly? Is that fine? Maybe we should. I
Just
love
as
the Curve Weekly.
Yeah. Like, it doesn't matter if it comes out 5 times a week, it's still weekly, you know? Like, it's...
I think at that point we call it daily, surely.
Yes, yeah, but like, I kind of was like, yeah, why are we... Yeah, so my vote is we keep it the Curve Weekly.
I kind of agree. I love the Curve Weekly.
Yeah.
Okay, we'll park there. The
Yeah.
thing we wanted to ask was, we're planning, because most people are interested in news, we think, more on weekdays. You're not really going to be sitting in bed on a Saturday morning listening to the Curve Weekly, I can't imagine. So our thoughts were to release them on Mondays like we do normally, and Wednesday, and then move our Thursday Raising the Curve episode to Fridays, because those are more like interview style, conversational. You can it's probably more of a Friday listen. We have so much consistency. People listen on Monday and Thursdays, so we didn't know if we moved things around to a Monday, Wednesday, Friday, if that's going to throw people. My question is, if we released episodes Monday, Wednesday, Friday, instead of
that
Monday,
seems more
Thursday,
succinct.
is that going to throw people off? Is this going to be a blowout for anyone? So we're going to put a vote in the podcast description. Can you let us know? Because we don't want to change anything and it'd be annoying. I hope everyone has had a really good Easter. I mean, it's obviously Easter Monday, so whatever you're doing, I hope you're having an amazing time with family and friends, eating lots of chocolate. And we do have a really great episode coming out on Thursday with Danielle, who is an expert in the crypto space. So if you're wanting to know everything about how should you invest, when should you invest, what should you invest in, she is amazing. And when we recorded this episode, I think I messaged everyone in the Curve team being like, guys, crypto, oh my God, classic me getting excited. But a really cool episode, so keep an eye out for that later this week.
Bye. Happy Easter.
Thank you so much for listening to the Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode, because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday, but until then, listen to a Raising the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of the Curve Weekly on Monday.
Okay, quickly, the Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.